Hey everyone, welcome back to Corporate Decoder. Today we're diving into S&W Seed Company's latest quarterly report, and let's just say it's a bit of a mixed bag. Think of it like planting a field hoping for corn, but you end up with, well, stick around to find out. Before we get started, if you enjoy getting the real story behind corporate filings, be sure to subscribe. Also, join our Discord community. You'll find a link in the description below. S&W Seed, a company that specializes in agricultural seeds, particularly sorghum and alfalfa, is trying to grow but is facing some real challenges. We'll see a picture of revenue that is declining and lots of red ink on the bottom line. It's not pretty. At Darky, let's jump in and see what's really going on. S&W Seed filed their quarterly report called a 10Q with the Securities and Exchange Commission, or SEC, on May 15, 2025. This document is like a health checkup for the company, giving investors an update on how things are going. First up, let's look at the numbers. The condensed consolidated balance sheets show a snapshot of the company's assets and liabilities. S&W Seed had about $69.6 million in total assets as of March 31, 2000 dollars. It's as of March 31, 2025. But they had over $120 million a year prior. What caused this drop? Liabilities are at $36.6 million. A good number to focus is at the very bottom, the stockholders' equity at about $26 million. Current assets show $11.4 million in net accounts receivable, but on June 30, 2024, the same number was a bit better with $14.6 million. It indicates that the company is collecting payments slower than before. Moving to the income statement, the condensed consolidated statements of operations for the 3 months ended March 31, 2025 and 2024 show revenues of $9.5 million and $9.3 million respectively. So revenue is only slightly up. However, the important number here is the loss from operations at $662,000. Net loss is high again at more than $2 million for the quarter and $20 million for the last 9 months. With results like this, the company need to do something or it will run out of cash soon. The net loss attributable to S&W Seed Company per common share is a loss of $1.10, which means anyone holding the stock got poorer by that amount for each share. Now for the serious part, the forward-looking statements. S&W Seed is upfront about the risks they face. They talk about everything from maintaining loan compliance to managing demand for their seed products. Macroeconomic events, geopolitical issues, and even weather conditions are all cited as potential threats. It is boilerplate for companies to say, we're trying our best, but a lot could go wrong. Still, it is worth to look at. They mention changes in trade policies, crop disease, and the cost of legislation as factors impacting their future. If things don't go their way, it could really hurt their financial results. A big part of S&W Seed's story is what happened with their Australian business. S&W Australia ran into financial trouble and entered a voluntary administration. This meant S&W lost control of the subsidiary and had to remove it from their financial statements. It's like losing a major limb of the business. To try and salvage something, S&W Seed made a deal to transfer certain intellectual property or IP to S&W Australia. However, they got a license back for selling those products in the Americas. They talk about a deed of release with the bank NAB releasing S&W from a guarantee, potentially saving them from even deeper losses. One of the biggest concerns is liquidity, their ability to actually pay the bills. S&W Seed acknowledges they are not profitable and have negative cash flow, meaning more money is going out than coming in. It is mentioned that the company is not profitable and has recorded negative cash flows from operating activities for the last several years. At the balance sheet, the company shows long-term debt and capital lease obligations, a debt they owe to other people of about $4.5 million. Digging deeper, the report explains how they handle taxes. They mentioned a valuation allowance because it's unlikely they'll be able to use their deferred tax assets. In simple terms, they don't expect to make enough profit to take advantage of past losses. Looking more at the income statement, they lost money due to foreign currency transactions because they exchange money with various countries. They also mention about their net loss, and it mentions interest expense net of over $2 million. Now, the company will talk about market risks and their procedures to follow. There are lots of metrics in the equity section for stocks. Looking to the future, there are a few big question marks hanging over S&W Seed. We see that the company's liquidity depends on a lot of outside factors like the world economy, access to capital, and their ability to find good partners. Their own strategic plans depend on them doing well, and having access to capital, but the sale of their Australian entity might have reduced their overall worldwide operations. There is also a risk section here, and they mention new tariffs or trade restrictions may raise the cost of raw materials, components, or finished goods. S&W Seed no longer controls the Australian operations, which are now considered discontinued operations. The discontinued operations contained in the non-current assets, property, plant and equipment, net of 3,540,075 and some intangibles, net for over 500,000. These assets will no longer help the company produce. In terms of actual earnings, it showed a 2024 gain and also large losses in 2025. This meant that it made the net loss per share terrible, but these are now discontinued, so these losses won't show again going forward. And at the bottom there's the statement of equity, which shows the distribution of ownership. Finally, for statement of cash flow, there were cash used in operating activities, cash provided by investing activities from continuing operations, and net cash used in financing activities from continuing operations. So, what can we make of all this data? So NW Seed is at a crossroads. Their revenue is shaky and profitability remains elusive. They have a new plan in place. The cost cutting is a good sign, but there is uncertainty about the future. S&W Seed is making tough choices, as we have seen from the strategic review and the discontinuation of their Australian operations. And it is always hard to say where they go from here. With that said, they also need to shore up that balance sheet and demonstrate their ability to operate profitably. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.